Hi, this is the banker here from GroupTraders.com. Today I wanted to run you through a particular trade that is coming to focus a lot more over the last week or two. It's a pretty obvious type of trade, but with the unpredictable, choppy price action that we've had in the last few weeks, it's been a little bit more difficult to trade, but it is coming back into focus. As a quick reminder, the last month has seen the AIG bailout of the US, over in the US by the Federal Reserve. Lehman Brothers go bankrupt, and the US Senate and Congress have just passed the amended bill that Hank Paulson and Ben Bernanke put to them some days before. The Dow on the no vote initially dropped, in fact, 700 points. And then again on Friday, when it was voted yes, it dropped 450 points. So there seems to be no direct correlation between the yes and the no vote, difficulties in the financial system, and what equities, what the sentiment is in equities, and hence the currencies. Without saying too much about the fundamentals behind this, we're going to get straight to the trade because I've only got a few minutes. And as we'll see straight away from the chart here, we're in a downtrend that's been lasting a week and a half. This is on cable, by the way. We're in a quite a pronounced downtrend. This is a 1 hour chart. This gives us a quick view of what's happening. We've got some moving averages. We've got the 10, the 20, the 34, the 55, the 60, and the 200. You don't need all of these, but I like to have them just for indicative purposes. Okay, the 1 hour chart just shows us which direction price action is going. It's pretty obvious, but it's a good graphical illustration. We're going to flick down to the 15-minute chart, if I can get to the right day. Yeah, here we go. This is the day I'm talking about, October the 2nd. Again, 15-minute chart. The price action is hugging the 55 and the 60 EMA. Getting into the nitty-gritty of the trade, scroll to the correct part, we will see that this is now the 15-minute chart, and as we know, price action is in a downtrend. Okay, so we've had a look on the higher time frames. We're now drilling down to the 5-minute, and we will go to the 1 minute. So let's get some lines drawn in. Obvious support and resistance lines. Let's get them in here. As a resistance. There's support. I'm going to give you a line here that's going to denote the London open time. It's around about 6:20. Let's make that. Okay, there's 7 o'clock UK time. So that would be 2 a.m. Eastern Standard Time, that red line there. Okay, so we're in the London Open. It's one of our focuses in the Group Traders room, and we'll see how price interacts with various levels. In a downtrend, obviously, and the first one I'm going to pick out is we've got a piece of resistance here. Well, it starts here, hits again here, third time, fourth time. So if price moves up to this kind of line, it could be a good opportunity. It will be a reasonable opportunity to sell on price hitting this line again. Indeed, it does here, and this would have been a reasonable opportunity to sell. We'll have a look at the oscillators. We're in overbought territory here on CCI. Our stochastics have just hit overbought and are starting to turn down. So that's another two nice added confirmations. But that isn't, in fact, the trade I want to point out to you. I'm going to point out what I call a MAC trade, moving average continuation trade. And it's when I use the moving averages as protection in the short-term trend and to get in line with the medium-term trend. Okay, this is what I'm talking about. Price action moves up here, penetrates this line again here. It could have been a sell here, reasonably aggressive but that's the subject of another tutorial. If you'd have sold here, you'd have had a lovely run down, maybe taken half your position off at 20 pips and let the rest ride. But again, that is not the actual subject of this tutorial. What I want to talk about is, as you've seen the large move, let's say you missed this whole move down, and you're thinking, right, the trend is down, I need to get in line with the trend, where do I enter? Well, the buyers come in around about here. Let's get a level for you, 177.54, something like that, or 53, and the buyers come in. Price moves up from, say, 53, and actually retraces about 60 odd points. Okay, so this is where you're wanting to get in with the medium-term trend. The short-term trend is obviously up, but the medium-term trend is down. Okay, so we need to be looking for short sells here. Right, I'm going to drill to the 1 minute chart, and you'll see it a lot more clearly. Right, this is where we are. So the run. This is the run down here from the top, around about 1.78, or sorry, 1.77, all the way down to 176.05. So price moves down through the Bollinger Bands. These are Bollinger Bands here. They are Bollinger Bands multi-time frame, plotted onto a 5 minute chart, but superimposed onto the 1 minute chart. Again, that's another topic of conversation. There is a video on the website, grouptraders.com, on how I set up the charts. Again, please refer to that if you're not quite clear. So we retraced up 60 odd pips, I think it was. The point is, where do we get in short? Well, very often I like to get in short at the 10 EMA if it's a violent move. But here it's spiked down, and there's been a lot of buyers coming in. We have a large bullish engulfing pattern here on the 1 minute chart. So here I'll be watching for some signs of stalling and signs for the buyers to peter out and the sellers regain control. And this is exactly what happens. Here's a good sign. You see this candle here. It's a long wick. That means it's moved up, and it's got battered back down again by the sellers. And then the next one here, in the middle, this is what could be called a spinning top in candlestick analysis. Again, it's a good sign for a reversal pattern. Okay? And so therefore, I'll be looking to sell around about here. Other points to mention, I'm just going to draw it in. We've got some resistance. Hang on a second, get rid of that. We've got some resistance here. The reason I've drawn that line in is because we had stalling here, came down, retraced pretty much almost to the pip off there. So if price got to there, I'd definitely be selling. But anyway, we've got exhaustion here at this spinning top, and previously the price has not got through the 34 period moving average, so that's looking as a line of reasonable resistance. So spinning top forms. As the candle potentially moves down past the wick of the spinning top, you get short. So what level would that be? That would be 176.45, let's say. Get short, take half off at 20. So you've got half off there at 20, okay? And your other half is still in. Your stop would potentially just be up here, maybe 25 pips. So you'd be in at 45. So your stop would be at say 70, something like that, 176.70. Slightly wider stop loss because of the added volatility. Okay, so we're short. We're still in short, and still in short half the position. Again, rides down, moves up again. Another opportunity to sell. You put another line in here. Why did I put this in? Well, we've had resistance here, so it's struggling to get through. Another major point is this is the mid Bollinger Band. It's actually the 14 exponential moving average plotted on the 5 minute chart, but it's our mid Bollinger Band. So I really like these as protection and strength, and you can get short again here. Bang. There must be, how many pips in it from there? 47. I'm going to have to wrap this up pretty quickly, but you're seeing what I mean, that using the moving averages as protection and taking 20, potentially another 40 off the table, you've got 60 pips in the bag. Very nice. If you want more information, please go to grouptraders.com, look at the videos there, and we have a trading room that you can join. Thanks very much.